let's just say that this is where we hang out, at around 75 on Brent and close to a 70 handle on WTI. How long before the president comes out again and starts putting pressure on the Saudis to do even more?
Well, my take on it, and I'm not allowed to vote here, so I'm not really one to speak, is that, you know, we were rising rapidly, and the price at the pump was rising rapidly, and now that we've tempered, people have kind of stopped talking about it. And we think that the $4 nationwide, which is, you know, 5+ in New York per gallon at the pump, is the price when people really begin to suffer. We think you're going there. You know, we think you're going to $100, $120 oil over the next 2 or 3 years. But for now, I think, you know, we've tempered it and it'll become less of an issue. What gets us to triple-digit crude again? Not enough supply. I mean, global demand is strong. You know, it's nearly 1.5 million barrels a day of growth this year. That's a lot, you know, and supplying that kind of oil, if it continues for another 2 years, we're out of spare capacity. As I just said, we've only got probably at most 2 million right now, globally, I think. With risk in Libya, Venezuela, Iran, you know, you name it, especially the Iranian one with sanctions. We are hearing that companies are unwilling now to buy Iranian oil in dollars because of the sanctions risk.
What you just said is fascinating. $120 a barrel oil in the next couple of years. Michael, I mean, that to me, I'm listening to that and I'm thinking, wow, that could sink, that could precede the next recession, right?
Well, I'm thinking, can the macro backdrop withstand triple-digit crude?
That raises a whole bunch of questions on the macro side. I mean, it also raises questions about how you want to allocate within energy equities. Do you want to be more of the services? Because I presume in that embedded in that call is a return to more complex drilling and so forth. But on the macro side, you know, you look at the long-standing correlations, 5-year forwards, 10-year forwards with crude, they're reasonably strong. So you do have to get back to where's the 10-year going to go? What does that mean for you know, the cost of equity, for example, for the S&P 500? But it also you know, raises questions simply about earnings visibility across several industries. It raises questions about you know, just is that really disruptive to the broader volatility surface? So
just to wrap things up, Paul, how much pushback do you get against that triple-digit call?
Well, the salesmen love it.
I bet they do.
You just keep repeating it.
No, I think, look, you know, again, to support what's just been said, that we've had 10 years of excess liquidity globally, and as a result, you're getting enormously strong oil demand as a result of very strong global economic growth. And as a function of that, we've been looking for inflation, and the most liquid inflation outlet is oil. It's pretty simple. So I think the argument hangs together, but I've been doing oil long enough to know that you can be completely wrong.